Ladies and gentlemen of the crypto space, we're live on a Friday, September 8th at 11:01 a.m. It's been a busy week for me, and I haven't been able to talk on the stream, and it's a Friday, so I get to talk and tell you guys it is darkest before dawn, or some sort of George Romero type of darkness that you could think of, and dawn is there. It's always there. The entire world, whether it's economically, whether it's the earth going around the sun, everything in nature executes in a cyclical fashion, so the cycles will cycle. Always, the question that needs to be in everyone's mind is how long it takes for cycles to cycle. And we like to get a sense of where we are by looking at data, and that data helps us understand where we are in potential cycles. So look at that face. That guy's been through war. It is austerity, and we have to reduce our capital spending. Bear in mind, that's exactly what they wanted. So they get what they wanted. And the whole thing we want to do, cycle to cycle, is become better at capital management, so the austerity is better handled. We are better prepared, and you will get better every cycle. I read a nice Twitter post a little bit ago, maybe a week or two ago, and the kid was talking about how many cycles does it take to really get good at capital management. And I think he was right. I think it was about 3. It takes 1 cycle to fuck it up completely. It takes 2 cycles to generate a portfolio and understand really what the hell is going on with regard to, your goals and how you want to achieve them, to develop a methodology, a strategy, something that's sustainable, and to realize you're going to have to remain in markets in some way or form and navigate the cycles. And it's the 3rd cycle where you're like, oh, I got my strategy, I got my methodology, and now everything's going absolutely vertical, and you're able to capitalize, whether it's with regard to the cash position, or you're able to invest and own different enterprise to add to that cash flow as the cash position increases in value, because you could vary the denomination of your cash position as well, as we've been discussing. So that's that 3rd cycle, and that is the most exciting. So keep that in mind in your journey. There's always a capacity to leapfrog, and maybe you did well the 1st cycle, and you have capital, and you did structure your portfolio in a way that did survive and retained a fair amount of value and is actually productive. And maybe your 2nd cycle is your 1st cycle, and you're going to go right to the next cycle in 2-3 years, whenever it is, and you're going to be like, oh, I'm not really that anxious. I'm not really running around trying to figure out what to do. I have a strategy, I have a plan, I know what I'm going to do, and I'm comfortable. When you see candles 20% to the downside, big candles to the upside, and you don't have the experience of seeing them, you're like, what do I do? And you're like, trying things. You're like, oh, should I buy? Should I sell? But when you have that experience, having seen those types of market moves, you're like, all right. It's not the move that you want to react to. It's the destination of where it's moving to and why it's moving to where it's moving to. And that has to do with directionality. Directionality continues until capitulation. And now we have an arsenal of data to indicate capitulation, particularly with regard to liquidity conditions. And you could see very clearly in the move indicator when bond market volatility was prepared, on the verge of drying up liquidity in just Q4, maybe November, December, even last 2 months of 2021. And that's when the Fed moves. So if the bond market moves, the Fed's going to move, because the Fed follows, as Jeff Snyder talks about, who leads who, the bond market or the Fed. And I would argue the bond market, I would argue with Jeff Snyder, what he says is the Fed follows the bond market. So, and that's what happened at the end of 2021. And now we have obviously the Fed balance sheet we could expect with regard to their outright interventions in the bond market. We understand how we've simplified the QE/QT conversation. Well, we don't need to think the way Gen Pop thinks, that the return of QE and somehow money printing is. Lost my train of thought because. Oh my God, everything's moving. Go away. My phone was ringing. Oh my God, what the hell was I thinking? Um, we don't have to think what Gen Pop thinks, that money printing is the path to uh, everything going in the right direction. That's not the way it works. It has to do with liquidity conditions and where that capital is. It has to do with pressures on that liquidity. Why do I say this? QE has specific effects, and it's not what people think it is. It really, in my mind, everything reduces to the capacity to print dollars and offshore dollars, because that is unconstrained capacity. We can inspect domestic liquidity. No. We can inspect domestic liquidity conditions the best we can by looking at the Fed balance sheet. But what I'm excited for is the amount of Treasury units, whether it's whatever time frame, but whatever quantity of units that were introduced into the system. And when this chart comes down, and it looks like it's being suppressed relatively well, but if we start to see this drop to like below the 100 SMA in the monthly, for instance, that's going to be very comforting. And that's when you start to see pressure on the dollar come down. Why? This is dollar FX. And we'll get back to this chart. But this is dollar FX. So if you have a capacity to borrow dollars, euro dollars, print dollars, you don't necessarily need to buy dollars. And that will relieve the feedback loop that has the potential to suck liquidity out of anything that can be sold. When you need dollars, you sell anything that can be sold. And from a sovereign perspective, that's U.S. Treasuries. That's what China and Japan are doing to bolster their FX markets. And from an individual perspective, it's risk assets. Crypto goes really quick. It's equities. So we haven't seen really much of an equity sell-off. There hasn't been that much forced selling there. So that I wouldn't be surprised to see that at some point, as many macroeconomists talk about. Then we could have a decent credit event, which induces forced selling. Is it a double top? Does it bounce off the TWAP? That'd be interesting if S&P bounces off the TWAP as move is coming down. Move takes the steam out of the dollar. The dollar somehow finds a top here on the monthly TWAP, because we'll come back to this chart now. This is the precipice. That's kind of why this is doom and gloom, darkest before dawn, because if breach through here, probably will send shockwaves to a degree, because this is the last average threshold that is significant with regard to a resistance to the downside. There's nothing else. You could go out to the 3-month. Let's do that. There's nothing. There's absolutely nothing up here to express resistance. You could probably look at volume, could you inspect maybe, fine if Japan, whatever Japan does with rates, I don't think they're going to cut. They've been talking about raising rates. If they raise rates, that'll take steam out of the dollar, because they'll have to reverse carry trade, which means they'll have to pay back yen-denominated debts over there and unwind their trading positions, because they bought dollars, they sold their yen, which is why the yen has depreciated so much. To buy dollars to buy U.S. debt, carry trade, it unwinds. They sell dollars to buy yen to shore up their positions as the carry trade becomes no longer viable. So there's a couple of things that could go on from a macro perspective that could also take the steam out of the dollar. But there's nothing up here from a technical perspective to take the steam out of the dollar. So I like to think through, what would the things be that have the potential to take the steam out of the dollar. Raising Japanese rates would do that, and that brings up the question, what the hell they're going to do from a fiscal perspective. How the hell can they afford those kinds of rates? And that's a whole conversation unto itself. In China, people are talking about 758. I mean, this thing's right on the verge of breaking through the highs in October 22. I mean, that's pretty wild. Is this a cup and handle of some kind, or whatever? It's on a level of resistance, and that's concerning to say the least. Um, well, probably the best takeaway from today's stream is how close we are to a financial complexity and potential force selling. And what comes from there is policy response, whether it's monetary or fiscal, and that has to do with the inevitable need to potentially finance social civility and make the balance sheet of the federal government actually work with regard to tax receipts. And that's the whole argument of other folks that we've talked about is there enough tax receipts to actually finance debt expenditure? And that's like debt to GDP. It's serviceable to a degree, but it's pretty much consensus at this point that it's not sustainable right now. And it's certainly not on a trajectory of sustainability. So, for instance, if we have the wonderful word, a recession, and a significant reduction in tax receipts, that's that fiscal dominance that everyone's talking about. If you have a reduction in income from a government standpoint, you got to print more debt to pay the interest on the debt, and now you have more interest to pay on overall debt. So next year is going to be pretty wild. What was it, like 33% of all debt needs to be refinanced? So next year is like such a convergence of incredible shit. I will come back to crypto markets, particularly because the convergence of all these macroeconomic factors really points to an, a need for lower rates. And it doesn't mean they're going back to zero, but that if they need to refinance this debt, why are they going to refinance at these ridiculously high rates? So there's a need for lower rates to make the refinancing more reasonable. There's all these pressures on Japan and China, especially, and Europe, but they're going to get their energy needs probably from the U.S. over the next decade. But there's the pressures in Japan and China really point to the cyclicality of FX complexity. And in that regard, we zoom out from an FX perspective. So to me, next year is kind of like making sense for a wonderful top in the dollar to restabilize, to shore up international supply chains, and get everything to a little bit more of a comfortable place from a macroeconomic and a geopolitical standpoint for at least a period of time. And that is in the interest of all nations. And that is a manifestation of collusion, geopolitical collusion to achieve that. I mean, from a technical perspective, we've talked about this. That is a remarkable 6-month shooting star. What would it take for this to break above 115 again? I don't even want to know. And how could you have continuation after a shooting star like that? It would be pretty remarkable. So in my mind, I see 2024 as a great setup for significantly increasing global liquidity conditions. They printed, and they're going to have to print so much fresh on the run treasury units. Move comes down, it breaks 670, breaks the TWAP on the 6 months, 78, and then offshore printing is off to the races. We have a significant expansion in global liquidity, and equity markets do what everyone is hoping and likely expecting them to do. And obviously that introduces the cyclical reality of disparity, where folks that own assets significantly outperform folks that are just earning wages, and that's not going away. So, the more things change, the more they stay the same. So they're changing with regard to resonance and how exacerbated. The peaks and troughs are getting, but they stay the same with regard to the problems, and the problems are just getting exacerbated. And disparity is a complexity with regard to social civility. But we also say they will inevitably be forced to finance social civility. We'll talk about crypto, but let's see who's in the house. Dan's in the house. Zero Flex. Good morning, killers. Can you talk about the latest Aura updates? How do you rank CVX versus Aura at this point? Not talking about price, focusing more on utility and demand. I don't see any significant recyclers in play for Aura. I mean, Prism just came online for Convex, and there's a bunch. Curvance and what the other 3, 4, 5 that we've talked about lately are coming online, and they're designed to recycle the excess supply. And they want to do that for their own business interests. And when they are doing that for their own business interests, that is inherently going to support everyone that's involved in that asset or that network or uh, that federation, with a currency producer and financing of liquidity and that kind of service and that kind of enterprise. So that is just really entrenched at this point. That is probably the most interesting thing heading into 2024, because if there's excess liquidity in the macroeconomic system, uh, enterprise is going to spin up, and that enterprise has a utility to finance their liquidity needs. And that's a big deal. That means it's potentially one of the most significant businesses that has an established moat in crypto markets. So that's quite exciting. Now, bear in mind, Aura is a go-to. It's done incredibly well with its 80/20s. It's gone to all chains. It's expanded its footprint significantly. It's adjusted its tokenomics accordingly. Obviously, the dollar per VL's Aura has come down significantly. Uh, I don't think it's invalidated in any regard. I think it reminds me of Lyft compared to Uber. It's just the second market, with the primary market actor being obvious with regard to that utility, financing of liquidity, and that's meaningful. Whether I don't think this comes down to like portfolio composition and whether you're concentrated into one thing or you diversify. And it's kind of like, everyone says sell the losers to buy the winners, and that's how you do things over the years, and you increase concentration, because we know that's contrarian, as the average actor sells a part of their winners to diversify into other things, and that's not necessarily something to do. It's a very contrarian methodology, which I very much think is the case, and I subscribe to that. I'm very fond of concentration, which implies finding the fastest horse, which is something the Bitcoin community talks about, and I think they're spot on in that regard. And I think Bitcoin will do well. I think it has its place in the cash position. I don't want to digress into Bitcoin. We were talking about Aura and Convex, and I think Convex should be recycled very well. I think there's going to be a lot of actors, especially Frax, and what Frax is cooking up. And they're close. Was like a month or two after audits. So that's going to be quite interesting. Now, Frax has not been productive, but Frax is building something that's far superior to anything MakerDAO ever conceived. And if it achieves all expectations, I think we're not going back to a ZIRP environment, zero interest rates. I don't think it's possible. So I think we cycle higher lows, higher highs from an interest rate perspective, which means the whole composition of global finance is changing, and what it means to be an actual viable enterprise. And it also means the reemergence of enterprise that are better suited to accommodate higher interest rates. And with regard to financial enterprise, doesn't that scream Frax? and on-chain issuance of sovereign debt instruments, and the circulation and the leveraging and the utilization of actual yield-bearing primitives. So that's pretty wild. I'm talking all this stuff about Frax to give some context to the significance of convex. So that's a big deal. And that is partially why I took this position, because the story with Frax is coming sooner than later. And maybe that was a little early, and that's always a statement that could be made. There's a little difference between being early and wrong with regard to you telling whether you were actually right, made a good decision or not. So we'll see. That's that story. I do want to talk about a very uncommon project that I don't often talk about. I'll get to it in a second. One curious view, a pleasure. Killis, have you heard anything about hooks on XRPL? What's your thoughts? Okay, this will bring up what I was just talking about. There's two projects out there that are monumental. Like, it's as big as the community thinks they are and talks about, and that's Ripple and Link. Everything they say is the case. I don't trust to have a capacity to capitalize based on what those market actors that talk about the protocols are thinking. I'm inclined to think it's beneficial for Ripple to be cheap, to facilitate transactions, and to execute messaging and the XRPL and tokenization and stuff that Ripple will get to, especially considering Chainlink. And Chainlink's whole CCIP is tokenization of everything and just moving it anywhere. So I don't see a reason for XRP, the token, to be pushed to be a high price. It's more beneficial to be a cheap price. I see massive monumental things for XRPL. I wouldn't deny that for a second. And it's the opposite of denial. It's like it's obvious that it's going to be huge. I just don't see financial opportunity. And that's me. So bear in mind, everything that I have positioned with regard to my portfolio has all the knock-on effects needed that if Ripple does what it's going to do and Chainlink does what it's going to do, I have the right investments. So I have all the exposure I need to Ripple doing what everyone thinks it's going to do and Chainlink doing what everyone thinks it's going to do. That's the bottom line. I just don't need exposure to those assets. I have a much more sophisticated exposure to the market that those protocols will serve. And the same with regard to Link. Now, the price of Link, I don't know. Maybe there's significant capital gains in both of them. But where am I with my capital management methodology that has allowed me to find a sustainable way to engage with markets? I don't want the capital gains. I don't want to have to think about when am I going to sell? And am I going to sell all of it? Or is it just going to go up in price forever and I never have to sell again? Because that's what every, hodl Bitcoiner would say. Yeah, it just keeps going up in price. So I could always sell a little bit for cash and it just keeps going up in price. Yeah, until there's deflation in the global financial system and you have 30, 40, 50, 60, 80% retraces. All you have to do is look at the Bitcoin chart to know there's periods of time with regard to Bitcoin that you're probably not going to want to sell any Bitcoin. So I'm not fond of it in that regard. And with regard to Link and staking and yield of transactions, I don't believe that they will be there. And that's me, and that's fine. There'll probably be Link Marines that would argue I don't know what I'm talking about, but I operate under the premise that if it's not paying now, why would it pay in the future? Because I think the powers that be in global finance are behemoths. They just wield so much power from a capital standpoint and from an influence standpoint. They're going to dominate They'll just buy all the fucking Link and stake it all, and then they get all the fees. A bank will come in and buy all of it. Chase, J.P. Morgan, they'll just buy it, then now they get all the revenue. So and then maybe there's a capital gains aspect to the sequence of events that I'm describing. So I don't see it, and I don't need exposure to it, but I know that if we got banks hidden transaction fees all over, cross-border transactions all over the place, they're going to need FX, foreign exchange, and they're going to need liquidity. And I know if there's real-world assets that are facilitated by CCIP, there's going to be collateralization. There's going to be leverage. There's going to be transactions and swaps and all the things we know from a financial perspective, consumption of these assets and yield. So increasing liquidity, just inherent to the asset, increasing valuations. So we already have exposure to all that shit. So I think having Link and XRP is redundant exposure. And I know those community participants would say the contrary, that all you need is that exposure and you don't need any of this. But the difference is I already have the cash flow. Now it's in the protocol's implementation, and I have the evidence over the last year and a half of how much cash flow it is. If I deployed to those assets, Link or XRP, I would have no cash flow whatsoever. So it's speculative cash flow. That's the difference between real cash flow and assessing what is versus what is speculated to be. So I live my life based on speculating what I have now and where it might go, rather than speculating what I may have in the future. And I think that is a more sustainable way to manage capital. We don't know what's going to happen in the future, but I do know what is today. And I do know, looking at my balance sheet, that last month, August, was the most profitable cash flow month since February and March. It was a nice bump for the fiscal year 2023. And if I go back to 2022, August was on par with, it was higher than some of the revenue in 2022. So that's meaningful. I could live and make decisions and choices from a real world perspective based on this cash flow. And I can't make real world decisions and choices based on speculated future revenue. And to me, that's heading down the road of hopes and dreams. And I don't want hopes and dreams. I want, how much are these motherfuckers going to pay me on Friday? And if they're paying me now, how much are they speculated to pay me in the future? X, Y, Z. How much does it cost? How much is it paying? And what is the likelihood of that payment to continue into the future? That's my methodology. Asarko's in the house, a pleasure. One curious view, can you clear your notifications on screen? Oh, yep, it's our anniversary. I love you. I know. Okay, is it that bad? I get a lot of notifications. Sergio present, Lord of the Pine Cones, good morning, Cab. Would he be able to show you a macro outlook at Ethereum BTC? Let's do it. So the problem is, we can look at the technicals on Ethereum and Bitcoin, but you really want to look at the dollar. So let's go over to Ethereum. It's the monthly TWAP, and that's what catches my fancy. Obviously, there's higher lows here, and if we have a breach of the TWAP to the downside, but that breach of the TWAP to the downside is really dependent on the breach of the monthly TWAP on the DXY to the upside. So Bitcoin and Ethereum are knock-on effects from global liquidity, and global liquidity is very nicely expressed by the DXY, because as the dollar becomes more valuable, foreign currencies become less valuable, less purchasing power, therefore liquidity dries up real quick. Let's look at Bitcoin compared to Ethereum. So Bitcoin on the monthly is above the TWAP, but below the 50 on the monthly. For Ethereum, it's above both. So I would say in regards on the monthly, Ethereum has a stronger technical presentation. If you go to the weekly, which is what everyone likes to look at, you'll see that Bitcoin is notably below the 200, which is very much talked about, and Ethereum is above the 50 on the weekly and just below the 200. So even on the weekly, Ethereum has a stronger technical presentation as compared to Bitcoin. Um, I think that is an entire conversation unto itself, how to think about Bitcoin and Ethereum for a rational in capital manager, not a Bitcoin purist. So I think both of them are very well suited for the cash position of the portfolio, and I can't. I no longer have a capacity to think of them as investments. Clearly, uh, I think of them from an FX perspective, meaning you could swap. Look, you could have swapped to euros in. Here, let's go to the euro chart. You could have swapped to euros in September of 22, and it could have achieved, and you would you if you did that, you would have avoided losing 11% of your money. So that's how much euros outperformed for fiscal 2023. So that's how I'm thinking about Bitcoin more so nowadays. Like you have the cyclicality with regard to FX markets, and the dollar appreciates and depreciates relative to FX currencies as well as Bitcoin and Ethereum. So I just lump it all together and I treat it all as cash. So you can adjust the cash position and very much expect different cash denominations to significantly outperform. And maybe it's semantics that I don't label them investments. I just label them cash management nowadays, and that's my mental model. And I'm prepared to spend as needed. It's my cash savings if it's accessible. It's not an investment. And I have a very clear definition of an investment is something that produces a return. It is paying you to own it. That to me is what distinguishes cash position from an investment. Hope that helps. Sir Joe or the Pine Cones, Raul. Good to finally catch a live stream. We caught up the last couple of weeks. Yeah, today's a good one. It's good to be back. Can't wait for the good old times when you talk about taking positions. I look forward to technical analysis and seeing very clearly structured ascending triangles. I'm not fond of reversals, like, finding an inverse head and shoulders or a descending triangle breaking to the upside. It smell weakness, barring liquidity conditions, also bolstering the directionality. And to me, that's not the case. To me, right now, the chart that I watch is the DXY. It's right on the verge of crushing liquidity conditions. And this, clearly don't inspect the liquidity conditions the same way Mike Howell does. Clearly, he's a veteran of the industry and has incredible access to data. Um, but this is my way of seeing it in a technical chart, and it's obviously consistent with the tone and content that he has been producing of late. He has been talking about China and liquidity conditions getting interrupted from a global perspective, and the data that he presents shows it softening as well. And everyone has their way of getting the data they need to assess where the hell the markets are. And for me, it's as quick as this. It's quick and dirty. And clearly, there's a lot of granularity and a lot more subtleties involved in the composition of global liquidity. But this thing blowing up clearly has an effect on purchasing power of international currency units, foreign currency units. And to me, that obviously dries up global liquidity. Their purchasing power goes bye-bye. Can you explain how Bunny is tied to Uniswap and how it benefits? Bunny is the curve to Uniswap, and it's like a strapped on curve to Uniswap, and Bunny has Liquis now. So Liquis is the convex of Bunny. So we could be on the verge of a convex moment for Bunny, possibly. I size my position accordingly, and it's productive. It's very nicely productive. Um, so just keep that in mind. It's not established as clear as like, a balancer or a federation, but it has some traction, some popularity. It has some of the infrastructure. It's like when Aura came online for Balancer. That shit was hot. And that's what's going on over there. And Uniswap has a role. Uniswap's going nowhere. That's entrenched. And it's highly utilized. And it's very functional. And its V4 is very interesting. So, you know, let's say you have like 3, 4, 5 positions heading into 2024. You should expect some to do very well. You should expect many to survive. Over the years, I could think back to 2016 in my equities portfolio. I've had many companies go bankrupt and they're gone. So that is something that I think about a lot with regard to crypto enterprise, especially with regard to the determinism and the immutability of the contracts. Is there a way for a protocol to fail? Sure. You get hacked and whatnot, or the contracts don't work and they're immutable. And there's failure conditions, but the failure conditions are very different than bankruptcy. Like balance sheet failure from an enterprise standpoint, traditional enterprise standpoint. So like you could have significant depreciation on these assets. That doesn't imply failure. There is no balance sheet. There's no balance sheet with regard to these assets. There's no capex. There's no human resources. It's a completely different equation as comparing inspecting the value of a traditional equities position, as a traditional value investor would inspect the balance sheet of a traditional corporation. There's much greater survivability of particular crypto enterprise than anything I've ever seen in traditional equities markets. And that's comforting. So while everyone is frantic about price depreciation, the markets are dead, nobody's around, there's no excitement, I'm comfortable. I see the depreciation. I'm like, okay, I understand. It's not like bankruptcy is something even relevant. These aren't balance sheets like that. There's no human resources way. Oh, I can't pay my employees. There is no damn employees. It's smart contracts that aren't going anywhere. These smart contracts for the protocols that survive are guaranteed to see the next liquidity cycle. Say that again. For the protocols that survive, as in the contracts are functioning, there's consumption of the protocol, there's an expansion of other protocols using the protocol, there's actual liquidity going through the protocol. And if that is the case in the next liquidity cycle, that's tremendous. And that's survivability. All it needs to do is survive. Why? The most important thing to take away from 2022 and 2023 is compare it to 2018 and 2019 and what survived. Nothing. There was no business. There was no enterprise. There was vapor. It was all IPO and capital raise, people buying worthless seed rounds in products that never came to be. That's what the ICO craze was in 16 and 17. And 18 and 19 was the flushing of everything. I mean, what, Syscoin and obviously Ethereum survived 18 and 19, and there's other protocols that survived, and but it's a very, very short list of any significant technological innovation that continued to mature and survive. And they haven't done so well in the current DeFi landscape. But that's another story. So what about the DeFi protocols that survive into the next cycle? There's no history for it. It's unprecedented. And to me, that's fucking crazy. That's extraordinary. Because I've been through this for a decade of my life, and there's an actual emerging market, a market. That's crazy. So while everyone's frantic, I'm nervous too about price. It impacts my life and my capacity to finance week to week and month to month expenses. I'm fucking excited as all hell. This shit's crazy. Protocols that survive through the liquidity cycle. There's an actual stickiness to liquidity. Circle's doing what it's doing with Coinbase. Tether has got so much capital income because yields have gone through the roof that they're buying Bitcoin and shit. It's CCIP and Ripple doing what it's doing. Oh, this, the setup is wild for the next cycle. Wild. I don't think I could say that with any more emphasis. Hope that helps. From the perspective, in order to gain exposure to the cash flow from Curve, do you think locking in the DAO is the way to go, or LP with, say, 30,000 Curve tokens or so? I cannot answer these types of questions. Why? Because capital management is personal. I can tell you that it is more difficult to manage a smaller portfolio. It is harder to make returns with a smaller portfolio. And you have to assess whether it's good or not. Meaning, 30,000 Curve, let's say Curve, we speculated, one, it survives. Two, let's say it continues to pay 25, 30% over the next 5 years. Is that currently paying you an effective rate of return that you're satisfied with? And let's say Curve does a 5x, maybe a 10x in the next 5 years. And then it's paying maybe 15, 20, 25%. Is that an effective return? If it's not an effective return for your expectations, then you will be disappointed, and you don't want that. You don't want to have expectations exceed what actually plays out. So run the numbers, assess your expectations. And obviously, for like a 20-year-old, it's like, oh, I got nothing to lose. Their expectations is 1,000,000% on Bitcoin, which is never going to happen. So a good part of what I've done over the years is restrain my expectations. I'm not expecting 1,000x on the money on the portfolio to be filthy rich and shit. That's not my expectations. I'm probably one of the few people that look at the crypto markets and I'm like, how am I going to survive this and manage my capital such that I have enough cash flow to replace work? Something reasonable, something not extravagant and extraordinary, something rational. So assess your expectations. And it is the case that the smaller portfolios, you're probably, to align with most people's expectations, is thinking about capital gains methodology, of which PvP, it's biological, it's survival of the fittest, and it is what it is. And I'm grateful that I don't have to engage with that kind of methodology. But that is certainly the case for the smaller portfolio. You want to turn $1,000 into $100,000. That is a whole lot of speculation, a whole lot of gambling, a whole lot of capital gains, PvP, lions and tigers and shit. That's a whole lot of that, and that's okay. But to achieve 100x on a portfolio, that's the type of methodology that needs to be executed. You're not going to get 100x on the portfolio necessarily with this passive value investing methodology, albeit it's not impossible. I mean, listen, you get a significant amount of liquidity inflow, like $20 trillion. You're going to have assets that are running 1,000x on the money. So maybe you do get 1,000x on certain assets, certain cash flow positive crypto enterprise. Who am I to say? But I don't want to bank on that. I don't know. I hope that helps. It's complicated. Any good resources on learning more about how to get exposure to the Curve cash flow? Well, there's a laundry list of protocols that are recycling the assets. For many, Curve is not necessarily the most the best asset for the portfolio. It requires a significant restraint with regard to expectations, a significant recalibration to what you what you think you could achieve or what you want to achieve. You know, if for folks that are engaging with like Doge and Pepe and Shiba Inu and stuff like that, they would never understand this mentality at all. They would see the curve chart and be like, this is a failure. This is nothing. It's dead. It's garbage. And when I see it, I'm like, holy shit, it's surviving. And it's paying week after week for all this time since December of 2021 when liquidity started to drain and the market started to shrivel. It's still here. And that's extraordinary because that didn't occur in 18 and 19. It didn't. Nothing survived. It was nuclear Armageddon. All the cash flow, all the liquidity went away. And that's not the case anymore. We're going to end on this note. I mean, look at this shit. $66 billion. $66 billion. If this isn't even liquidity, this is liquidity on the markets, on the chains. This isn't looking at market cap of USDC and Tether in 2019 at $12 billion. This is the amount of these coins on these networks. That's crazy. So I'm freaking excited. Woof! Get me all riled up and shit in the morning. I'm sorry. When I get riled up, I say bad things. And I know folks have said to me in the past, don't use the bad words because sometimes they're in the car with their kids. But hopefully we're all excited. Hopefully we all understand that we're at the precipice. You know, this intro screen is very relevant. Darkest Before Dawn. They got some zombies in the background of that screen. But this line right here, that's a big deal. This has got a hold, and frankly, from a weekly perspective, you want to see a retrace below the 50 on the weekly. And there's about 7 hours left to do it. So this is a very precarious time. With regard to short time horizon, with regard to mid, long-term time horizon, that's exactly the point of today's stream. I appreciate all of you. Thank you for joining Friday, September 8th at 11:48 a.m. Tell everyone to subscribe. There is a community of folks that will survive into the next liquidity cycle. And I want front row seats to when that shit hits bottom and starts to do what everyone knows it's going to do. In the description is the most rational community in the crypto space. I appreciate everyone who's still there. Y'all have a good one. Enjoy the weekend. I will see you next week. Peace.